Hi, thank you for watching today's snapshot video. We've had some impressive European economic data this morning. The European services and hence the composite PMIs are all ahead of expectations. So it's all a bit of extra evidence that the European economy is doing the best it's done in a good while. And obviously, generally, when the European economy is doing well, you would expect the euro to do well. And indeed, obviously, we saw that big breakout last week. It's been tracking low for the past few days. So we want to just have a quick assessment of the charts for both the euro against the dollar and the euro against the pound, where notably UK services were disappointing. So typically that euro-pound pair would be a natural one when you've had the good economic data from Europe on one side, poor economic data from the UK on the other side. So we're going to have a look at both those charts and see whether this positive economic data might be the catalyst for further strength in the euro. So here is this daily candlestick chart for the euro against the dollar. Now you can see here that we hit that 114.50 level. As a quick reminder, that's our long-term resistance as part of this range here, which has been the closing and high for multiple weekly candlesticks. Now, obviously, pulling back from there, that was natural and understood. But what we are assuming at this point is the trend is still intact, and we're looking for a place in which the trend is going to resume. This would naturally be at the old highs here, so around the sort of 1280 level. But certainly, when the trend is strong, it doesn't necessarily have to pull back to the previous peak. So we've just narrowly dipped through the 1350 level. We had an initially positive reaction to the European economic data, but obviously there's always other factors at play. The Federal Reserve minutes are out later today, and so we're seeing a little bit of strength coming back in for the dollar. So if 1350 isn't doing it, maybe the 13 handle, the 1280 is going to, maybe we even drop back into the range, the previous range, which would be around 1250. And that would also be our 20-day moving average roughly. So not quite the evidence yet that the euro is finished its dip, but we're looking for it to happen somewhere within the next 100 pips. If we switch gears now to the euro against the pound, a slightly different picture in that, again, we've hit that long-term resistance, but because of all this chatter about a potential UK rate rise, the strength of the euro against the pound has been capped somewhat, despite the data really showing the opposite trend, where UK economic data is slowing, strengthening in Europe. So that's the weekly chart. You can see that 88.50 level is key. We've had a number of long tails from there, and we suspect that major of those long tails are the first sign of a bigger decline. And so we're getting a bounce off these kind of lows here. So this was the previous peak in around 87.70, and that's proved to be a floor alongside the moving average. And we basically put in a double top, but we just haven't quite broken through the neckline of it to show that there's going to be some short-term downtrend action. So the euro looking positive in the short term against the pound, but you know, that may be fleeting if indeed this does turn out to be a double top. So that's it for our snapshot video today. Just as a quick recap, we were looking at euro mostly in the currency market. Obviously, we've had some strong European economic data. European economy is doing well, but we've got to set that up against a potential UK rate rise if the Bank of England policymakers are to be believed, and we have those Federal Reserve minutes where likelihood is that those policymakers over in the US are going to point to another rate hike in September. So thanks again for watching this video, and if indeed you enjoyed it, please follow LCG on social media.